In today's episode of the Daily Brief, I'll talk about two big stories. I first share how Europe is building Starlink's rival. I then discuss what does the outlook for commodities like oil and gold look like in 2025. Welcome to the Daily Brief show by Zerodha, where our aim is to simplify the biggest news in the financial markets in a way that's one level deeper as compared to other news channels. I'm your host, Kashish Kapoor. Today is Wednesday, 18th of December. You can find us on Spotify, Apple Podcasts, or wherever you consume your podcast. The Daily Brief is also available in Hindi. And if you like reading instead of watching or listening, you can sign up for our No Spam newsletter for a quick rundown. All the links are in the show notes. So let's begin. Imagine this. There's a war or a natural disaster or maybe just a blackout in some tiny village at the edge of nowhere. The local internet, fiber cables, cell towers, everything has gone down. But the people there still get online. They check the news, call for help, send messages. How? A signal from space. This is what Starlink does. Thousands of tiny satellites orbiting the Earth beam fast internet down to anyone with a dish the size of a pizza box. No cables, no infrastructure, just a clear view of the sky and an internet connection that works almost anywhere. You already know the person who built this. Elon Musk. And the people who don't like this, at least not anymore, are Europe's leaders. Last week, the European Union signed a 10.6 billion euro deal to build its own satellite internet system called Iris. If that sounds like a big, expensive reaction, that's because it is. Iris isn't just about launching satellites. It's about not being at Elon Musk's mercy. Because Musk, through Starlink, now controls something far more valuable than rockets or electric cars. He controls the internet in places no one else can reach. And Europe isn't comfortable with that. To understand why Europe is spending billions, let me give you more context on Starlink. In the past, internet from satellites was a joke. Slow, expensive, with a delay so bad, you'd click a link and watch your browser go way too slow than Internet Explorer. That's because old satellites sit in geostationary orbit, that is 36,000 kilometers above the Earth. They are far, far away. The signal takes forever to bounce back and forth. Starlink fixed this by putting satellites much closer in low Earth orbit from 350 to 1200 kilometers up. The lower orbit makes the internet faster and reduces delays to almost nothing. It's not quite as good as fiber broadband, but it still solves the problem. And more importantly, it works anywhere. Deserts, forests, war zones, oceans, places where normal internet doesn't exist. To make this work though, you need a lot of satellites. Thousands of them. Each one beams internet to a small patch of Earth as it orbits. So to provide global coverage, you need a swarm of satellites constantly moving around the planet. Musk, through SpaceX, has already launched over 6,000 Starlink satellites with plans for tens of thousands more. By now, you would have guessed that this stuff isn't cheap. The users pay around $599 for the dish and about $120 a month for the internet service. This changes everything. Suddenly, someone living in the middle of a remote village in Africa has better internet than someone in the city with a bad broadband connection. Ships at sea, planes in the air, and people in disaster zones, all online, thanks to Starlink. This sounds great, right? And it is. Starlink is one of the most impressive technologies of the last decade. But it also comes with a problem. It's entirely controlled by Elon Musk. Here's an example. In 2022, when Russia invaded Ukraine, Musk turned Starlink into a wartime communication network overnight. Ukrainian forces used Starlink to coordinate drone strikes and stay connected as Russia bombed traditional internet infrastructure. Without Starlink, Ukraine's military operation would have fallen apart literally. But then Ukraine asked Musk for something extra to expand Starlink coverage over Russia-occupied Crimea, where they needed it the most. Musk said no. He worried it might escalate the war, so he just refused. One man decided where Ukraine could fight. This scared a lot of people. It showed that Starlink isn't just a tool, it's leverage. Musk has total control over who gets access and who doesn't. If Starlink becomes the backbone of global internet, then Musk becomes the switch. He can turn it on or off for an entire country at any time. It might sound reasonable to assume that Europe looked at this and thought, what if we are next? This fear wasn't new. Mario Draghi, the former head of the European Central Bank, recently delivered a report that spelled it out. The report was commissioned to assess Europe's competitiveness in changing world, and it hit hard. Draghi pointed to Starlink as prime example of how Europe was completely being disrupted. Musk's satellites were faster, cheaper, and better. Starlink's dominance wasn't just putting European space companies like Airbus and Thales at risk, it was making Europe strategically dependent on a US billionaire. The report highlighted that Europe had no equivalent to Starlink. If Musk decided to cut off Starlink access tomorrow because of politics, business interests, or just bad mood, Europe would be stranded. And while Musk's loyalty is unpredictable, his influence is undeniable. Draghi's conclusion was clear. Europe needs to act. Without its own infrastructure, it risks being outclassed economically and vulnerable geopolitically. Maybe that's why they're building Iris. The name stands for Infrastructure for Resilience, Interconnectivity, and Security. But really, it's Europe's way of saying we are not leaving something that important in Musk's hand. Iris will put 290 satellites into orbit by 2030. It will do two things: provide secure encrypted communication for European governments and militaries, offer broadband internet to citizens, businesses, and industries across Europe and beyond. But the problem is that Iris won't be ready until 2030. By then, Starlink will likely have tens of thousands of satellites blanketing the Earth, with global dominance locked in. Musk's network already operates in over 100 countries, and SpaceX is launching satellites every week. Starlink is fast, it works, and people are signing up in huge numbers. Iris is Europe's attempt to catch up, but catching up won't be easy. Now, on to the second story. Let's talk about something that affects everything, from the food on your table to petrol in your car, and even the gold jewelry that your mom keeps nagging you to buy more of. I'm talking about commodities. As Indians, or rather anybody, commodities impact us more than we realize. Fuel prices affect transportation, food prices are linked to agriculture, and precious metals aren't just for jewelry, they're essential for electronics too. Now, commodities are a vast topic, but today we'll keep it simple and focus on just energy commodities, that's oil, gas, and coal, and precious metals like gold and silver. Now, over the past 3 days, I dug up all the outlook reports that these big banks release for 2025, and I read them all, and I decided to summarize all of them for you. Sure, their price targets often miss the bullseye, but they're great at aiming in the right direction. I'm here to summarize it all for you. No jargon, no fuss. And of course, link it back to what really matters: your expenses, your investments, and keeping your wallet from crying. Now, you may ask me, while I was reading all these reports, why did I not decide to talk about, let's say, equities or bonds or any other thing for that matter? Why talk about commodities? Honestly, I don't know. I just felt like, so here we are. Let's start with the most traded commodity in the world, that is oil. Oil prices are expected to average between $71 to $73 per barrel in 2025, according to ING. Why? The drama with OPEC plus countries still continues. The group, led by Saudi Arabia, is stuck between two tough choices: keep production low to support prices, or pump more oil and risk prices falling below $70 per barrel. Meanwhile, non-OPEC supply, particularly from the US, is projected to grow by 1.4 million barrels per day, that is BPD, outpacing global demand growth of just 1 million BPD. This means that 2025, we will see a surplus of oil, putting pressure on prices. Geopolitical tensions are another wildcard. Conflicts in Russia, Ukraine, and the Middle East could trigger supply disruptions, which is why oil markets remain volatile. However, there's a safety net. OPEC's spare capacity sits at over 5 million BPD, meaning they can step in to stabilize supply if needed. But energy market is much more than oil. Let's also briefly talk about others. Let's talk coal, which is expected to peak in 2025. Why? While countries like India and China remain heavily reliant on coal, cleaner energy alternatives like solar, wind, and natural gas are becoming more competitive. Governments globally are pushing for decarbonization, and coal is losing its spot as the world's go-to energy source. However, coal's resilience in emerging economies means its decline will be gradual, not immediate. Let's talk about nuclear power. It's making quite a comeback. Rising energy demand from AI-powered data centers has revived interest in small modular reactors and nuclear projects. Finally, gasoline. Global gasoline demand is also expected to peak. Why? Because electric vehicle adoption and better fuel efficiency in traditional cars are finally catching up to rising demand from growing populations and economies, especially in countries like India. But there's a catch. Even as demand is slowing, new refining capacity is coming online. The star player here is a refinery in Nigeria, the largest refinery in Africa, which is expected to run at full capacity next year. This massive plant will produce a lot of gasoline and could change how the global gasoline trade works. It's not alone. New refineries in Mexico and the Middle East are adding even more capacity. And here's where the problem starts. Too much refining capacity and not enough demand means refining margins, that's the profit refineries make, will come under pressure. This could force refinery closures, especially in places like the eastern US, Europe, and China, where plants are already struggling. Now, let's move on to something Indians hold close to their hearts: gold. Whether it's weddings, festivals, or hedging against uncertain times, gold is a big deal here. And guess what? Gold is poised to stay strong in 2025, with prices expected to remain elevated, hovering around $2,650 per ounce, according to the World Gold Council. Before we dive into the outlook, let's not forget that gold was one of the best performing assets in 2024, surging 28%, its strongest run in over a decade. It outshined stocks, bonds, and other major asset classes as investors sought safety and returns. Why is gold doing so well? And why will it likely stay strong in 2025? There are a mix of factors. First, central banks are buying like never before. Emerging market central banks are loading up on gold to reduce dependence on the US dollar. Countries like China, India, and Turkey are leading the way. Central bank purchases are expected to continue supporting gold prices. Second is about falling interest rates. The US Federal Reserve and other central banks are expected to cut interest rates in 2025. We've already seen this happen. Lower rates make gold, a non-yielding asset, more attractive since the opportunity cost of holding it drops. This will likely boost investment demand through gold ETFs. There is historic evidence for this too. Gold has risen by an average 6% in the first 6 months of a rate cut cycle. Its subsequent performance has been influenced by the length and depth of that cycle. Third reason is geopolitical tensions and market risks. Uncertainty is gold's best friend. Whether it's ongoing conflicts, trade wars, or a new US administration stirring the pot, investors turn to gold as a safe haven asset during volatile times. And fourth reason is Asia's role. Asia will remain critical. China and India are gold's largest markets. More generally, Asia makes up more than 60% of annual demand, excluding central banks. While Chinese consumers have been on sidelines lately because of the property crisis, strong investment demand from the country's markets has kept prices high. If economic stimulus picks up, China's appetite for gold could grow even further. Even Indian demand has benefited from the reduction in import duty in the second half of the year. Now, what about silver and platinum? While gold shines the brightest, silver and platinum are also worth watching. For silver, prices have surged to a 12-year high in 2024, driven by demand from solar panel manufacturing and other industrial applications. This trend is expected to continue in 2025, with silver prices projected to rise 7% next year, according to some estimates. On the other hand, platinum faces challenges. Weak demand from automotive sector, where it's used for catalytic converters, has slowed its momentum. However, tighter mine supply among major producers could still support the price, which are expected to increase by 5% in 2025, but total demand will still shrink. Summarizing the outlook on precious metals, gold's stellar performance in 2024 was no fluke. In 2025, demand drivers like central banks buying, lower interest rates, and geopolitical risks will keep gold in the spotlight. Meanwhile, silver will gain from clean energy and platinum will have to trade carefully. So, after all of this, after going through all the outlooks, one common investment theme seems to stand out. It's something like long gold, short oil. From an investment perspective, that's what the experts are signaling. And honestly, for us Indians, this is pretty good news. We love gold, whether it's for weddings, festivals, or just as a safe investment. If prices go up, those investments shine even brighter. On the other hand, we import a lot of oil, which means cheaper or stable oil prices work in our favor. It helps keep transportation costs low, fuel prices in check, and most importantly, ensures that inflation doesn't spike. So, as we step into 2025, this mix of higher gold prices and manageable oil prices might just be the sweet spot for both your wallet and the economy. And now, on to the tidbits for the day. First, India's trade deficit surged to a record $37.8 billion in November as gold imports spiked 4.3 times to $14.9 billion, comprising 20% of total imports. Meanwhile, exports fell 4.8%, driven by a 49.6% drop in petroleum and a 26% fall in gems and jewelry. Second, Dixon Technologies partnered with Vivo to exclusively assemble phones, potentially doubling Dixon's production to meet Vivo's 30 million unit demand. This move aligns with India's PLI scheme and strengthens Dixon's market leadership, positioning India as a mobile manufacturing hub. And finally, Vedanta announced its fourth interim dividend of 8.5 rupees per share, totaling 3,324 crores for FY25. With strong cash flows and consistent payouts, Vedanta's market cap crossed 2 trillion rupees, reflecting investor confidence amid a metal sector rally. And that's it for today. I'm your host, Kashish Kapoor. This was the Daily Brief, and I'll see you in the next one.
Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.